Well, we're definitely excited about DeFi at Coinbase, and we want to make sure we help build the future of this technology here in America. Actually, a lot of traditional financial services firms are integrating this technology. I mean, everybody from JP Morgan, Visa and MasterCard, Franklin Templeton, they have projects and teams internally working on how to integrate crypto into their services. And I think the reason for that is that 80% of Americans are not happy with the current financial system as it is today. They think it's too slow, the fees are too high, it doesn't serve everybody equally, and a lot of the technology was built 40 years ago, the laws were 100 years ago, and so people are really excited about how crypto as a technology can help improve and update the financial system.
There is an urgent need for the complete overhauling of the existing financial system. There are several arguments against existing payments and financial systems, including the fact that they are old, outdated, and have proven to be quite inefficient over and over again. The cryptocurrency industry was created to gradually phase out the dependence on the traditional financial system. The fact that Bitcoin emerged during the depths of the great financial crisis is not lost on many who have argued that the decentralized ledger system is the only true solution to the mess created by traditional financial systems. It might have taken over a decade, but most Americans now agree that there is a need for drastic changes to the existing financial system. According to the Morning Consult Cryptocurrency Perception Study, 67% of Americans believe there is a need for a complete overhaul or major changes to the financial system. The figure is slightly higher for cryptocurrency investors, but this is undoubtedly because they are mostly more knowledgeable about the mess of the financial system and the amazing offerings of the cryptocurrency space. In a recent tell-all interview with Bloomberg, Coinbase chief executive Brian Armstrong discussed his thoughts on the regulatory crackdown on the crypto industry in the United States. Armstrong, who is also the chairman of the American Cryptocurrency Exchange, explained that most Americans understand the urgent need for the cryptocurrency industry over the 40-year-old traditional finance that has proven to be as unreliable as inefficient. The 40-year-old billionaire also discussed the importance of growing the industry in the United States if the country is to retain its position as an economic and geopolitical global leader. While a region like Dubai is trying to create a thriving crypto ecosystem, the U.S. Securities and Exchange Commission has launched an all-out war on the industry in the United States. Over the past few months, the financial regulator has gone against everything from stable coins to securities and staking. We will now bring you Brian Armstrong's interview as the billionaire discusses the regulatory onslaught on the crypto industry and how he and other industry leaders are preparing for the battle ahead. Please watch the video to the end, hit the like button, and subscribe to the channel. Also, ensure you drop your comments and observations in the comments section below to help with the YouTube algorithm. Thanks, and enjoy the video.
Crypto is many different things, right? There are crypto securities, which we believe there should be a robust market for that in the US. In fact, we acquired a broker-dealer license. It's still dormant right now, but we'd like to work with the SEC to activate that and create a healthy market structure to trade crypto securities. Now, of the 1,000 assets we've looked at Coinbase, 800 of them we've rejected. We don't think we have, maybe they're securities. 200 or so of them we have listed on our platform. We believe those are commodities. And so we're going to continue to build that piece of our business. We're regulated by the CFTC, for instance, and make sure we grow that piece as well. But crypto is many things. It's commodities, it's securities, it's stable coins, it's artwork, it's decentralized identity systems. And so it's tough for people to wrap their head around, but it's ultimately going to have many different regulators.
You were talking about how there are multiple regulators for the crypto industry, but who should be the primary regulator for stablecoin?
Well, I think Congress ultimately is the one that's going to create the laws in the United States, right? And so we could probably use new legislation, new laws around how stablecoins should be regulated. I don't presume to tell them how to do that, but I think some of the key things are uncontroversial. I mean, we need to have one-to-one backing of assets behind these stablecoins. We need to have audited financial statements to make sure the firms issuing these are doing a good job. So these are just kind of basic good practices, and I think a stablecoin bill is one of the first things that could really help get consensus and move things forward in DC.
To the extent you still have concerns around the stablecoin industry, what would they be?
I mean, as broadly as a concept, I don't have concerns about it. There may be individual stablecoins which are better or worse. I mean, we actually recently delisted, BUSD as an example, and the reason we did that was, Paxos had gotten, who's the issuer of BUSD, had been kind of ordered to stop minting it. So we were concerned about liquidity issues for our customers. But we're always evaluating through our internal processes different stablecoins, different assets, and updating when we see new information that comes to light. So USDC is growing quite a lot, and I think actually USDC USDC is it's the best answer to a stablecoin in the United States, right? It's issued by Circle, which is a US-based company. We're in partnership with them, and we want to see that grow. It's also been a really nice source of subscription and services revenue for us, which is, in contrast to trading fees, which are quite volatile. We've seen in our Q4 earnings that our subscription and services revenue is now 47% of Coinbase's revenue, almost half. And so that's allowing us to build a more predictable business with a diversified set of revenue streams. So yeah, I'm quite bullish on USD Coin, and I feel like that's a good solution for the US.
Does that look a lot more like traditional banking?
Not necessarily, no. I mean, in traditional, there's many differences. In traditional banking, there's fractional reserve, they have banking licenses, there's capital requirements. Everything in USD Coin is backed 100%. There's no fractional reserve. So I think of USD Coin as a really important tool to help payments be more efficient globally. It's helping provide access to something like a bank account, but it could be self-custodial for many people around the world who don't have access to a stable currency. It can improve even a lot of DeFi, which you mentioned at the beginning. The trading pairs are denominated in USD Coin. So these are all good things which are an important part of the ecosystem.
Hedge funds had been very much getting into crypto prior to last year. I'm wondering if the SEC's crackdown is starting to scare any of them away.
Well, in a way, actually, I think Coinbase has been a net beneficiary of this because there's essentially a flight to quality. Coinbase, we're a public company. We have audited financial statements. We're a qualified custodian. I mean, we're basically the choice, based here in the U.S. that hedge funds are going to want to work with. And so in Q4, I mentioned this on our earnings call, actually, that we saw an increase in the number of institutions onboarding to Coinbase. Now, a lot of them haven't deployed substantial capital to crypto yet in this market environment. They're kind of waiting and seeing. But it's great to see them onboarding, and that's kind of a coiled spring that I think could unleash a lot of potential in the next market change.
Amidst the regulatory crackdown and unsavory market conditions, it's quite a relief to know that hedge funds and other institutional investors are still interested in allocating to the digital asset space. Despite the decline in digital asset prices, numerous financial giants, including Fidelity, BlackRock, and JP Morgan, are getting adequate exposure to cryptocurrencies and other digital assets and bringing their big money clients with them. However, there is still the giant stumbling block of regulation. As Armstrong has explained, these big money investors will be more interested in allocating money to crypto when there are clear regulatory guidelines for the industry. According to the Coinbase CEO, this is one of the reasons why he is so concerned about the SEC's recent moves. While he and other industry leaders are already working with and hoping to continue working in harmony with regulators, the business executive added that they are ready to challenge unnecessarily suppressive regulations in the courts if needed.
Yeah, I mean, my number one priority this year is the policy environment. So we need to make sure that that gets to a good place in the US. The rest of the world has actually embraced crypto. We've seen all the major financial hubs, Singapore and Hong Kong and London, and the EU just passed comprehensive crypto legislation. So really what I believe should happen in the United States is that we need a clear rule book so that this industry can be built here. We don't want it to be like 5G or semiconductors that went offshore. It's actually a matter of national security. We get the future of the financial system built here inside the United States. And so I've been spending more time in DC, here in New York, but in DC in particular, we're trying to meet with the relevant folks that could help draft legislation so Congress can come in and pass comprehensive legislation. Look, I think that would be a terrible mistake for the United States. I mean, look at what's happening with AI, right? That's an important technology trend where it's becoming a matter of national security, right? That some of these things are built in the US. Or we saw it in the past with 5G or with semiconductors. And so if we have this really powerful technology, cryptocurrency, that has the potential to update the financial system and improve it in so many ways, how can we sit on the sidelines in America and say, oh, okay, well, we're going to let the EU pass comprehensive legislation, and so it'll be built there, and we're going to let the UAE and London and Singapore and Hong Kong. I mean, this is America. We need to be a technology hub. We need to be a financial hub. And the future of this industry needs to be built right here in America. Yeah, so, I mean, we recently saw there was a settlement with Kraken. That's another exchange out there. And they have what they called a staking product. It was kind of more of a yield product. But, in Coinbase's case, our staking product is not a security. There's many differences. I mean, customers never turn over their assets to Coinbase, for instance. They're always in the customer's possession, and we're really just providing a service that passes through those coins to help them, participate in staking, which is a decentralized protocol. So that's an important part of the crypto economy that we want to make sure that we ensure that that's out there. And we're prepared to defend that in court if we need to, but we're never looking for a fight. We want to work collaboratively with regulators all over the world, but we have to follow rule of law, and in this case, I think we're well within the law. The SEC has expressed their view about what is a security, and they've taken kind of an expansive view of that. Coinbase, we've evaluated over 1,000 different assets, and as I mentioned earlier, 800 of them we've rejected, and we do think they have some properties of being a security, so we don't trade those today. Another 200 or so of them we do trade today, and we feel that those are commodities. So, look, I think as a CEO, we want to basically just have a clear rule book, right? And if a clear rules are published, we're happy to follow it. And if those rules change, we're happy to follow those. But I think, when we became a public company, we explained to the SEC in our S1 filing and in dozens of meetings that we've had with the SEC, I think we work pretty collaboratively with them. We've explained our business to them many times, including in our S1, and they approved us to become a public company. So we'll continue working with regulators all over the world about where the boundaries are on what's a commodity, what's a security, or what is something else. I think we have a good relationship with the SEC commissioners and staff, and I've met with the chair as well, and so we're going to continue to invest in those relationships. I would like us to find a way to bring crypto. I think this is what they want too. Our interests are aligned. We want to bring this industry within the regulatory perimeter so that we have good consumer protection, but we also preserve the innovation potential of this. And as I said earlier, 80% of Americans want the financial system to be updated, and this is the most important technology I'm aware of that can help do that.
What are your thoughts on Brian Armstrong's interview? Do you think the SEC's regulatory onslaught will drive cryptocurrency platforms offshore? How do you think that will affect the country's economy and the overall development of the digital asset space? Please drop your replies, comments, and observations in the comments section below. If you enjoyed this video, please give us a like, subscribe to the channel, and check out our other crypto-related videos. Thanks for watching.